Hi everyone. In this video, I just wanted to spend some time working through our in-class problem for chapter 2 and going through that and solving it with you. We did that in class today and we had to kind of move through it quickly. And if you were struggling in class to remember exactly what to do or how to address these problems of job costing, this video is for you essentially. And I'll work through the answers here for our in-class assignment, and then I'll also have in Canvas next to this video or in the same section a link to a blank version of this same spreadsheet. And so if you are struggling, if you're not struggling, everything's makes sense and you're doing good, or if you just want to practice extra, you can. But if you're not struggling, not as big of a deal. But if you did find yourself struggling, I highly recommend that you bring up the in-class chapter 2 instructions here, bring this video up and follow along with me at least once, make sure you can understand what I'm doing, etc. And then turn the video off, get the blank version of this out, and try to complete the assignment without any assistance yourself, and make sure that you know what you're doing. And I would recommend doing that at least 2 times. And if you really want to feel ready for the test, and you don't have to, I would recommend not doing it all at once. Actually, I would space it out, but I would practice and do it preparation at least 3 times if you're feeling like it's still kind of challenging to really lock this into your understanding for how to complete these kind of problems, because you're going to see it on the exam. I guarantee it. And just understanding these concepts it just takes practice. That's the biggest thing. And it takes, you're not going to get this the first time through immediately. You got to practice it. That's kind of true with all accounting, but especially some of these topics in drill accounting really require practice. I can't stress that enough. And it's not like we're going to change the world in terms of how these problems are completed. It's that's one thing about accounting that's nice, is once you learn the process for doing things, then generally they're usually the same as you go forward. So just get it locked in. That's going to give you confidence, and you're going to do well in the exam, and you're going to be able to get the most out of this class. So all right, so with that said, let's get started. So here I've got kind of this just whole blank spreadsheet with T accounts. We've got a job card summary. Again, we're in chapter 2 on our in-class problem. This is in your class packet in the binder there. And again, in-class problem, chapter 2. In the problem, it says on April 1st, Grace Printing has work in process inventory of $2,700, etc. So you know what? Actually, what I'm going to do, I'm going to take a little screenshot here, and I'll just paste that in here so we can see that if we want to refer to it, so I don't have to look off screen too much, and you know exactly what problem we're working on. So here's the problem. Again, we did this in class, so same problem there. We're going to do it in Excel. We did it on paper in class. So so on April 1st, we have this business, and the business has work in process inventory, raw materials, and manufacturing overhead. And then we've got some subsidiary data, and then we're going to be doing some journal entries to start, assigning costs, putting manufacturing overhead in, and accounting for that, and then recording the sale, and finally clearing manufacturing overhead. Okay, so with all of that said, we're going to want to start with our beginning balances. And so remember, in chapter 2 with job costing, we're talking about individual customized jobs. And in this problem, we just have one job that is work in process at the beginning of the month, basically. And then we've got an additional job that comes on for Lexus Smith here during the month. So a couple little things here to put in. Actually, I'm going to do one thing too here. I'm going to insert a column. Actually, I'm going to insert 2 columns there, just so we have enough space to put in all of our data. And what I want to have, and what you need to remember, we don't have to have the job cost card look any way really specific, but we do want to have it display some specific information. So we want a beginning. I'm just going to put BEG I'll write it out just in case. Beginning. I think I spelled that wrong. Okay, I guess I spelled that right. I'm not sure why that looks so wrong to me, but that's fine. We have a beginning, we have additions, and we have ending balance. Okay, and then we're going to have direct materials. So I'm just going to put DM, direct labor, and manufacturing overhead, all of our regular costs of production. And then we're going to have, and maybe I don't need this extra column. Sorry, let me delete that out. I think we're good there. Let me add my border. Perfect. Okay, so I'm just going to do a little formatting. And let's do the same thing for our job down here. We don't have any beginning balance, but we're going to be putting some costs in here. So let's go ahead and put those in and do it that way. Okay. So let's see here. Now to begin. So we've got our job cost card kind of set up and ready to go, and we have a smattering of T accounts for various types of accounts. But I will say, if you're looking, because we'll do journal entries down here, and some of the accounts in our journal entries will not be reflected because this is just a partial list of accounts. It's not going to have accounts payable or cash or anything like that. This is just some of the accounts that are related mostly to the inventory and the job costing, essentially. So keep that in mind. Our journal entries will all, debits and credits will all match. We need a matching debits and credits, but we will be putting debits into specific accounts, but not like credits, for example, because those accounts are not reflected in the list that we have shown here. So, okay, let's start with our beginning balances. So we have one job. It's in work in process. It tells subsidiary data for work in process. And let's start here. So it tells us overall balances for our company, Grace Printing. So we have work in process of $2,700. We have raw materials inventory of $1,500, and we have manufacturing overhead has a $300 credit balance. So let's put that in the credit balance there. Okay. And then now that's great. And one really important thing to remember about chapter 2 is that anything that's in WIP or anything really that's in finished goods, etc., but especially WIP is really what we focus on in chapter 2, is that we have an underlying job costing card. So if this says $2,700, that tells us that in total we have $2,700 of work in process. But then the job cost card subsidiary is going to break that amount out. It's going to break it down and tell us which jobs those costs apply to and how they are actually broken out based on the specific components of material, labor, or overhead, basically. So to illustrate that, we can see our subsidiary data. It tells us we have $1,000 of direct materials. We have $1,000 of direct labor. We have $700 of manufacturing overhead. And then I'm just going to do a little auto sum to add all those together. And you can see the 2,700 matches the 2,700 here. So really this is the sum, the high level one aggregated balance. And if you drill down into the detail that is below that, that's when this would show up and we can see what it's made of. So it's made of one job, and it's broken out into these three components in this way, essentially, right? Okay. So cool. So we've got all our beginning balance stuff in here. And now let's do some journal entries down here. So I'm going to bring this, sorry, copy and paste this up, cut and paste it up a little bit higher so I don't have to scroll much when I'm doing my problem here. And so the first journal entry is we purchased $2,000 of raw materials on account. So I'm just going to I'll put raw materials. That's raw materials. That'll be our debit. Whoops. I'm going to actually, let me do it here. It looks kind of funny when it's so spread out. I'm going to make the column width a little smaller just to fit this better onto our screen as you all are watching me. And I think I can. No, that didn't work. Trying to see how I can get this as will fit to the screen here. Okay, I think that's good. So let's say raw materials. This is our general journal. These are our journal entries here. So we've got raw materials, and then it tells us that we bought this on account. So our credit would be accounts payable. I'm sure why everything's going bold. I'm going to undo that. And then we're going to indent our credit. If you remember how to do your journal entries. And our debit is going to be, they're both 2,000 on both sides. Okay, I'm just going to leave the bolding. It's the formatting is what it is. Spend time on that. And then we'll just, I'm going to bypass doing the explanations just because I want to save space on my screen here. So just, keep in mind you would have normal explanations just like you do with all journal entries, but we're just doing this kind of freehand here with the journal entries. Okay, so that's the first one. And again, so that goes into raw materials. So we'll put 2,000 debit, right? The debit here is the debit there to raw materials. Okay. And like I mentioned before, this accounts payable is not shown as one of the T accounts. So just keep that in mind. This is just a selection of T accounts. It doesn't have the accounts payable included. So, okay. Good deal. So then we've got journal entry number 2. I'm just going to copy this down to have the formatting available for me. And this is factory repairs. So remember, that's manufacturing overhead. I'm just going to put MOH. And we paid cash, so that's good. Change our formatting, and it tells us that's 1,200. So we got debits and credits there. And then we're going to put that into manufacturing overhead here. Remember, all the actual costs go into our debit. I mean, you can see debit, so it should be debit there. I'll highlight these just so y'all can see how that connects. Okay. Then we've got factory rent paid, and actually we can just leave that same. It's manufacturing overhead and cash again for that journal entry. So this is the entry here, number 3 of factory rent. Whoop. And again, that's going to go into manufacturing overhead. Just link to it there. Oop. Okay, and what else we got? We got factory. That last entry is $4,700 is paid to factory employees for payroll. So we're going to do a couple entries for that. The first one we're going to do is factory payroll, and its expense is what this account is representing. And I'm just going to put cash just to have it there. The credit doesn't matter. Again, cash and AP, wages payable. There's any of these credits, they're not listed out. We don't care about those really at this point for our purposes. Not that they're not important. They're part of the journal entry, but we're just looking at specific accounts, right? So the factory payroll expense of $4,700 is here. And that expense, we could see how it's a debit initially. Okay. And so that is all of our accumulating costs essentially, right? So we've got the raw materials purchase. We can see we paid factory payroll, and then we've got 2 overhead journal entries to record those expenses. Okay, now we want to assign those cost entries, and we want to move these costs into work in process essentially, because they're just kind of in the raw state, and we want to put them into work in process or manufacturing overhead, et cetera, appropriately. So to do that, we need to look at the materials requisition slip and the time tickets. So materials requisition slip is going to tell us how to move these raw materials and which jobs they apply to. So we can look down here and say, okay, we've got 1,000 to Jane Kelly's job and 1,500 to Lexus Smith's job. So materials, additions, that's going to be 1,000 right here. And then we have zeros all here. Do the same summation. So no beginning balance because this is the first time Lexus Smith's job got started during the month. So nothing at the beginning, but we are adding in 1,500 of direct materials. That's what this sheet tells us. And then we're going to put 300 of the direct materials for a total of 2,800. The 300 goes to manufacturing overhead. So we're going to put that over here. And this all comes out of raw materials of $2,800 total. So you can see that 28 down here. And from that 28, a portion goes down to indirect. That's what it tells us, manufacturing overhead. And then let's do the journal entry. Actually, that might be helpful to see. So we have manufacturing overhead. Oh, sorry, I don't want to do that one first. I want to do, we have WIP, a total of 2,500. And we have manufacturing overhead for 300. And then we have raw materials as our credit, as we're taking this out of raw materials for the total 2,800. And again, that's the totals here. It shows the materials moving from raw materials into these jobs. And then a portion of that raw material is being used for overhead. So this is our journal entry here. So we've got this 300, and then we've got the 2,500. Here's the 2,800 raw materials, and this is just moving out of raw materials. And then here's the 2,500 that relates to the direct materials used into WIP, and that's going to be so 2,500, and we'll just make that. Trying to color code these as well as I can so y'all can kind of follow along. It's too close to the other color. There we go. Neon blue. Okay. And then, okay, so that, and then we need to, anything that moves into WIP, we have to apply down here because this, again, this is just the detail of this. So if we put $2,500 of direct materials into work in progress for these Jane Kelly and Lexus Smith jobs, we need to actually, that is, well, I guess it is here, right? So we've got, let me copy, I'm going to do an auto sum again. So 1,000 so far. And then 1,500 for Lexus Smith. And you can see, I'll do a summation of both jobs below. And you can see that 2,500, that is that, right? And this is the 1,000, this is the 1,500, that's noted on the requisition slip. And then the 300 goes here to overhead. And that's the journal entry part. Okay, so that's the direct materials. Now direct labor, we have to look at the time ticket, and it says 2,100 went to Jane Kelly and $1,900 of that. The total is 4,700, right? That's that. But the next journal entry we need to make is to allocate the payroll. That we don't want it as an expense on the income statement. We want to take it out of expense and put it into work in progress and overhead for those components. So I'm going to just steal this entry again, put it down below because WIP and overhead is the same. I'm going to take off the color coding. And now this one's not raw materials. This is labor. So we're going to do factory labor as a credit. And we're going to take the whole $4,700 that's in there now, which we recorded with this journal entry above. We're going to remove that essentially. Or we're going to, we're going to zero out this account and we're going to move it. So that is here into WIP, work in process, and overhead based on the time ticket. So we've got 2,100 to Jane Kelly, 1,900 to Lexus Smith, like I said, and 700 to overhead for indirect labor. So 700 goes there. And then the 4,000, that's the sum of the two jobs there. 4,000 goes to WIP and 700 goes to overhead. So let's do a little color coding. So here's the 700 to overhead. And here's the 4,000 to whip. I'm going to have to end up reusing some colors, I think, here probably. We already used that yellow, so let me see if I can find a different. Do red. Okay, so that's the 4,000 into whip. That's shown here. The sum of the 7, so that's 4,000 debit, 700 debit, and then 4,700 credit is zeroing out that expense that was originally booked. So it's no longer an expense. Now it's in overhead and work in process inventory. Okay, and then again, anything that goes into work in process inventory has to be listed out individually, which is what the time tickets tell us. So Jane Kelly got $2,100 and Lexus Smith got $1,900. So there's those two pieces. Okay. And if you were to sum up these two here, so if you select just the labor, you can see it's the 4,000 because that's what we're doing, is just allocating that 4,000. Okay. Formatting there on the border is a little funny. Okay. Cool. Actually, I'm going to format that just a little bit. Okay. That looks better to me. Okay, so now we've got a bunch of work in process. And then the last piece that we need to add is just the manufacturing overhead applied. So not the actual manufacturing overhead, but the amount applied using our predetermined overhead rate. And we can figure out our predetermined overhead rate by the information that it provides us here when it says at the beginning of the year, basically we had estimated overhead, and we'll say that was $70,000. And we had estimated direct labor dollars of $100,000. That's what it tells us here. I think those look the same. So our predetermined overhead rate then is just taking our overhead expectation divided by direct labor expectation to give us 70 cents essentially. So what we're saying is that for every dollar of direct labor, we're going to apply 70 cents of overhead. And then we're going to compare that to the actual overhead expenses and clear that out at the end of the problem. So we know how much direct labor we have input based on our total time ticket here. So it's $4,000. So from a journal entry perspective on applying the overhead, let's see what I want to do. Let's take, I'm going to steal this journal entry. The credit is going to be actually overhead, and the debit is going to be WIP. So it's going to go into WIP, and we're going to credit overhead for the total of direct labor, which is $4,000. Again, that's what's shown on the time ticket right here. Total direct labor. We know it's direct labor because it's applied directly to these individual jobs as opposed to indirect labor noted below. And we're going to multiply that by 0.7. That is our predetermined overhead rate. So we are going to put in, I'm really going to run out of numbers here. So we'll do gray. Actually, yeah, so that goes into WIP is 2,800 of overhead. Oh, geez. That's that debit. And then we've got a credit to, so that was a debit to WIP, and then a credit to overhead of the 2,800. I'm just going to do dark orange. So that's our applied overhead. This is our actual overhead. Here's our applied, and we're going to compare those totals at the end and clear those out. But for now, just keep that in mind. And then again, we've said it over and over again, anything that goes in WIP has to be in the detail of WIP down here. And we know we can figure out how to break this 2,800 out by job by just taking the direct labor for each one of those jobs and timesing it by the predetermined overhead rate again. Boy, that looks funny. And then direct labor costs off the ticket times the predetermined overhead rate we calculated based on the detail it gave us here. And now we've got, I'm going to just format these real quick, sorry, just so they look a little more consistent. Okay, so now we've got all of our additions in, and if you were to add those two individual amounts out, you can see it sums up to $2,800, which is what we've debited to WIP here, right? So just get that in your mind. Anytime anything goes in WIP, it has to be in the subsidiary. This is just the parent or the high level account. This is just the details, but this is all the same thing. So in other words, if you selected all of this 12,000, and here, let me do this first. So we'll auto sum across to get our ending balances. Actually, I'm just going to copy this, paste it down, fix our borders. So that's just add across to get ending. So now you can see 12,000 is our ending balance between the two jobs there, the 12,000. And if you were to add all these up here, you can see it all sums to 12,000. So this is the same as this. It's just this has all the detail in it, and this is just the high level stuff. Okay. So, and then this was the journal entry we did to take to put the applied overhead in. Okay, so we're getting close to being done now. Let's see what's next. The print job for Jane Kelly is completed during April, so this job is done. So it's not going to be in work in progress. It's no longer in progress. Now it's done. And the total cost of that job of the 12,000 that we note as the total debits, $7,270 is Jane Kelly's job. And since that's done, we're going to credit that to reduce it down, and we're going to move that to finished goods because it's now finished. So credit out of work in process, debit into finished goods. Those are inventory accounts, asset accounts, right? Debits and credits there. And this would now be done basically. So that would, in next month, this would be gone, and the beginning balance for next month would now just be Lexus Smith, with the ending balance of the prior month then becomes the beginning balance of next month, and we go through this whole process again every month basically. So we move the Jane Kelly job out of work in process into finished goods, and if we didn't sell it yet, it would just sit here at the end of the month. This is inventory too; it could sit there for a while, but it tells us that we actually did sell it. And it was sold on April 30th at cost plus 75%. So now, oh, and sorry, let's do our journal entries down here. So the journal entry to move that into finished goods, like we just showed in the T accounts, is finished goods of 7,270, 7,270. And again, that's the total up here down to these. So moved from there to there, and that's the Jane Kelly total cost. And then we sold it. I'm going to do the journal entry first. We sold it for cost plus 75%. So now we moved it into finished goods, but it's going to go out of finished goods quickly. So let's do our two-part sales entry, which is you guys learned about in accounting too. We're going to do AR, and it's cost plus 75%. So we're going to take the total cost, which is what or you can do it here, 7,270. Times 1.75. And if we do that, in essence, what we're doing is take 0.75 of 7,270 and add that to 7,270. That's what this one timesing it by 1.75 does. And we're saying we're going to take whatever this cost was, and we're going to charge them 75% more of that as a price. So the AR, and then we'll record sales revenue. I spelled that wrong. Indent is that, and then the cost of goods sold piece to record the finished goods going away. We're going to have 7,270, but this is going to be COGS, so cost of goods sold, and this will be finished goods inventory. And so that will move it out of cost of goods sold. We've recorded our sales revenue, all that good stuff. And then here we'll do the journal entries up here. So this is our credit to finished goods. We have cost of goods sold with our expense for selling it. We have AR as our asset going up for when we receive the cash later. And then we have a credit to record our sales revenue for all those amounts. And that basically records the inventory being gone and us. Okay, just a couple more steps here in the process. So now we've kind of finished the completion, the costing, and we've sold that Jane Kelly job to her. We've got a receivable on the books that we're going to get cash later when she pays us for that amount. And the final thing we need to do here is it tells us manufacturing overhead clearing entry. So now let's look at our manufacturing overhead account and sum up the debits and credits. So our total debits are $3,200 for what we actually spent in overhead. And our total applied amounts, what is our credits, we have an applied balance of $3,100 to manufacturing overhead. So we have to see what do we need to book to balance this, and we need to record a $100 credit to overhead to balance it, because now we would have all the debits and credits equal $3,200, so it closes itself out to zero. Basically, we've debited increases, we've credited decreases, so now it's at zero. So that's the credit, and then the debit side goes to cost of goods sold. So whatever side we need to debit or credit, depending on which is larger when we're doing this closeout, we then either debit or credit cost of goods sold. And what we're saying with that, in essence, if you want the idea, the logic behind it here is we actually spent more than we estimated we would on overhead, essentially, through our predetermined overhead rate, right? We estimated we'd spend this amount. That's what we applied. But when all things were all said and done at the end of the year, the month or whatever, when things are all said and done, we spent a little bit more than we expected, which is kind of a bad thing. So we need to close this account out, and we're going to increase our cost of goods sold for the difference to eat a little bit of these extra costs, and increase our expenses a little bit. If we had applied more overhead than we actually spent, that would be favorable, and then we would be debiting the manufacturing overhead account and crediting cost of goods sold, which would reduce cost of goods sold. So that's the expense goes down. We would earn more revenue, more profit. So that's step number 10, essentially. So, and that basically brings us to the end of the problem. So hopefully that was helpful. Like I said, what I would highly recommend is if you're struggling with the problems in chapter 2 at all, watch this video, kind of follow along. You don't need to highlight everything I did, as long as I was just doing that for your benefit, as far as referencing where things are coming from or where the journal entries are for those, etc. Kind of ran out of numbers or colors at the bottom and wanted to wrap up, so I sort of stopped there. But hopefully you're kind of following along overall. Follow along with me, and then take a blank copy of this, which will be available. Take your class problem 2 and try and solve it yourself. See where you get hung up, come back here to solve your problems, and keep doing that until you're able to kind of go through this whole problem from beginning to end without having to get any assistance. And if you do that, you'll know you'll be ready for some of the exam problems you'll see that are similar. And you'll have, I think, all the information, solidly understood at that point from chapter 2 for job costing. So thanks, everyone. Hopefully that was helpful, and I'll see you in the next